Amur Minerals has secured a $10 million convertible loan facility to finance its nickel copper sulfide mine development in the far east of Russia. Paul Gazzard is a non-exec director at Amur, and he joins us now on the phone. How difficult was this, Paul, to get this convertible loan sorted?
Well, it wasn't very difficult at all. Good morning, Jeremy. The loan note was one of a good number that were offered. So we went to the market to first evaluate what products were available, and in any decent number, in terms of numbers of products being offered, the convertible was still predominantly the one with the most competitive arena. So we were both in the US and the UK offered a number of different shapes and sizes, and it was then a matter of whittling them down. So I guess the most period of time was spent in sifting through the number of offerings rather than going out and trying to drum up business.
What were the terms of the loan?
The terms, well, we're getting a 10 million facility. We've got 4 million as the initial drawdown, and then two further ones in 120 and 240 days, respectively. It comes with an 8% annual interest rate. And there are warrants attached as well at a premium to the prevailing share price. So if those are exercised, as any positive share price move would trigger, it brings yet more money into the company, which is all part of the aim.
And why a convertible and not straight debt? You talked a little bit about sifting through some of the offers you had. Clearly, there were a lot of people willing to enter into this deal with you, but why not straight debt?
Well, straight debt's a different beast. At the moment, we were looking at either a straight equity or a convertible. Straight debt tends to come in larger amounts, and larger amounts are talking to different kinds of institutions than the ones that we were looking at in this round. Mostly the ones that we are taking advice from or in discussions with are waiting to see the results of the PFS. We want to get that right. That's going to be going through a period of external audit over the next few months, and then we'll be released. At that point, we'll be able to talk to sovereign wealth, large institution and debt-type providers, and those are the guys who'll be bringing in much bigger debt numbers in order to move this project forward.
Yeah,
so a different quantum, really, of product.
So just confirm, do you have any debt at all on the balance sheet?
No. The only debt would be in this loan note.
Let's take on exactly what you're going to use this money for and get to the meat of the whole point of this and work out where the money is going to be allocated.
Sure. Okay. So the primary goal in this was to give the company good visibility on funding for the years to come. 10 million plus what's there already would give us at least 2.5 to 3 years of money, and we're able to then commit to some of the projects that need to be committed to at this stage of the project's development, so we can finish off and have externally validated by a third party the PFS, which is key to getting into the next round of discussions with any strategic partners or sovereign wealth funds or debt providers for the larger project. Then also we're going to be able to commence some of the larger bits of work. That would be the TEO study and the environmental studies, all of which need completing before we start to commercially develop the mine. And really, those are the sorts of things you don't want to be commencing until you've got good visibility of funding to be able to get to the end of that process.
So all this is now fully funded, just what you've explained is all fully funded with this convertible note?
We're funded to the next part, which we would say is bankable feasibility. So we'd be very happy with the next couple of years of funding. And really, I guess the primary goal of this was not that. It was to make sure that we were able to enter into discussions with the longer-term, significant strategic partners and investors without any time pressure in terms of funding, because those talks can go on for some extended period of time. So we're very happy to be in this position. It gives us good surety of our cash position for a number of years, and enables us to embark on some of the really big bits of work that we need to do to take this project seriously.
Okay, the final point is, of course, that we know because it's in the far east of Russia, the dead of winter is something where you have to down tools because of the extreme weather. I know that you are now getting back up and running for the new year. What do you hope to achieve in 2018?
Yeah, so in 2018 we'll be hopefully completing an ice road, shipping all of the project provisions out to site. That'll be taking place over the next few months, and everything that we need for the summer's drilling program will be taken to site. Then we'll be probably doing a slightly smaller drilling program than last year. Last year was a fairly extensive program. It added huge amounts of value, and we got strikes on some really high-grade parts of the asset. So we're probably going to be developing those out a bit this year. But primarily, I think the company's going to be investing its time in corporate discussions and really investing our time in looking at the NPV of the project, looking at the commercials of the project, how we go about mining this asset, and indeed that has changed with the drilling over the last 2 years quite significantly as we find bigger and higher grade areas of deposit on this mine site. And really pushing the project forward as much at a corporate level, if not more, than in the field.
Okay, Paul, look, we're going to leave it there, but thanks indeed for joining us. Paul Gazzard is Non-Exec Director at Amur Minerals. Subscribe to IG for educational content, company insight, financial analysis and expert commentary.